Welcome back to Ben's Book Club. Today, we're diving into an absolute classic, One Up on Wall Street by the legendary Peter Lynch. Now, this isn't just another dry finance book, trust me. It's more like a manual that argues something pretty radical, that you, the average person, can actually beat the pros at their own game. So let's break down how. So let's get right to the heart of it. The central idea here is just so empowering. See, Lynch's whole argument is that your everyday life, the stuff you buy at the store, the industry you work in, it all gives you this massive, built-in advantage over the so-called experts on Wall Street. You just have to learn how to see it, and more importantly, how to use it. So who exactly is Peter Lynch, and why should we be listening to him? Well, from 1977 to 1990, he ran Fidelity's Magellan Fund. And during that time, he delivered this number, a staggering 29.2% average annual return. I mean, that's more than double what the S&P 500 did in the same period. When someone with that kind of track record decides to share their secrets, you really ought to pay attention. This quote it nails his entire philosophy. Lynch believed that so many Wall Street professionals get completely obsessed with the day-to-day squiggles on a price chart and these incredibly complicated forecasts that they completely miss the most important thing, the simple, powerful story of a great business. He's saying the real money isn't made by chasing price, it's made by understanding value. Okay, and this brings us to what I think is the most powerful, and honestly the most counterintuitive part of the entire book, the amateur's secret edge. Yep, you heard that right. Lynch's radical idea is that you, the individual investor, actually have some pretty distinct advantages that the pros on Wall Street just can't touch. So here's where the whole script gets flipped. Think about it. The professional investor, they're often trapped. They have to worry about quarterly performance reviews. They can't afford to look wrong, which means they tend to follow the herd. And a lot of times they need a whole committee to approve a decision. But you, the amateur, you have freedom. You can be patient for years if you need to. You can act fast. And most importantly, you can act on your own unique real-world observations. So how do you actually use that edge? Where do you even start? Well, it all begins with a really simple principle. Invest in what you already know. Lynch is adamant about this. Your best investment ideas probably aren't going to come from some talking head on TV. They're going to come from your job, from a trip to the mall, or from your hobbies. Before you even think about putting a single dollar into a stock, Lynch has this brilliant, simple test. Can you explain, in 2 minutes or less, like you're talking to a friend, what the company does, how it makes money, and why you believe it's going to succeed? If you can't do that, you just don't understand the investment well enough. And just so we're clear, the stock is going up is not a story, not even close. All right, so you've got an idea, you can pass the 2-minute story test. What's next? Well, now you have to figure out what kind of company you're actually looking at. And to help with this, Lynch developed this amazing framework, sorting companies into 6 distinct categories, or buckets, so you know exactly what you're dealing with. And this framework is so critical because, let's face it, you can't judge every company by the same yardstick. A slow grower, like a big utility company, is all about stability and dividends. But a fast grower is where you go hunting for those huge home run returns. You have stalwarts, which are your big, reliable brands, but then you have cyclicals and turnarounds, which are much riskier and require really careful timing. The key takeaway is simple. You have to know which bucket your stock is in to even begin to understand its potential. Okay, now we get to the really exciting part, a term that Peter Lynch basically made famous. We're going hunting for tenbaggers. It's a bit of slang he borrowed from baseball, and for a lot of investors, finding one is the ultimate goal. Put simply, a 10-bagger is a grand slam investment. It's a stock that goes up 10 times what you paid for it, turning every $1 you invested into 10. You know, finding just 1 or 2 of these in your entire investing lifetime can completely transform your portfolio. And the best part? Lynch was convinced they were often hiding right there in plain sight. So what are we looking for? What's the secret sauce? Well, according to Lynch, these potential giants often share a few key traits. They usually have simple businesses and kind of boring names that Wall Street tends to ignore. They're financially solid with very little debt. And, crucially, the big institutions haven't all piled in yet, which means you can still get in early. And maybe the biggest tell of all, the insiders, the people who actually run the company, are buying their own stock. That is a massive vote of confidence. But here's the thing, finding a great company is only half the battle. The other half, and you could argue it's the harder half, is having the psychological discipline and the patience to just hold on. This is all about playing the long game. This is one of the toughest questions for any investor, right? Our emotions always try to get in the way. Fear makes us want to sell when prices drop, and greed can tempt us to cash out of a big winner way too early. Lynch, thankfully, gives us a really clear, logical way to think about this. The most important rule is this: you sell when the original story, the reason you bought the stock in the first place, changes for the worse. Are the company's fundamentals falling apart? Has its growth totally stalled? Or has the stock price just gotten wildly, ridiculously overvalued? You'll notice that none of those reasons involve panicking because the market had a bad week. It's always about the business, not the ticker. I absolutely love this quote. It's funny, for sure, but there is such a deep truth about investing packed in there. The best, most durable businesses are so simple and so strong that they can survive even if mediocre management takes over for a while. They've got a brand or competitive advantage that acts like a protective moat. That's the kind of company you want to own for the long haul. And this really gets to the heart of it all, doesn't it? One Up on Wall Street is so much more than just a set of investing rules. It really is a confidence manual. It's for anyone who's curious. It gives you permission to trust your own research, to believe in your own observations, and to actually invest for yourself. It's about focusing on the things you can actually control, like understanding a business and being patient. I hope you enjoyed this deep dive. Make sure you subscribe so you don't miss our next book club episode.